everybody, Josh Sigurdson, a World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen. And let's go into quantitative easing a little bit, John, because we'll kind of ease into it. Okay, that's a really bad pun. Anyway, this article from the Financial Times says, Draghi confirms plan to end QE despite weak economic data. And as the article goes into, Mario Draghi has insisted that the European Central Bank still plans to halt its 2.6 trillion euro stimulus program at the end of this year, arguing that inflation is set to increase despite recent disappointing economic data. Appearing before the European Parliament, the ECB president said the final decision to end the asset purchase program would be taken next month, subject to data confirming the bank's prediction that inflation was going to gradually rise. Mr. Draghi's comments came after signs of weakening business confidence, notably a slide in the Eurozone Purchasing Managers Index to a 4-year low. The region also grew by only 0.2% in the third quarter, compared with 0.4% in the first half of the year. But the ECB president argues that the slowdown was in large part a return to normal levels of growth after the Eurozone outperformed in 2017. Mr. Draghi pointed to the lowest level of unemployment since 2008 and the rising profitability of companies as evidence of what he characterized as the solid underpinnings of the euro area recovery. He said that while growth numbers had been somewhat weaker than expected, the bank remained confident that the stimulus program, a vital component of the recovery since its introduction in 2015, could be safely withdrawn. And I quote, "Generally, there is a good reason to be confident that underlying inflation will gradually rise in the period ahead," Mr. Draghi added, noting that wages are rising as labor markets continue to improve and labor supply shortages become increasingly binding in some countries. The ECB is at present buying 15 billion euros of mostly government bonds every month under the quantitative easing program, which stimulates the economy by putting money into the financial system and keeping interest rates low. Mr. Draghi told MEPs on Monday that even once the ECB stops buying bonds, it'll continue to provide a significant degree of monetary policy stimulus. The banks will reinvest the money from bonds that come due for an extended period of time, he said, adding that the ECB's policy of providing forward guidance on its interest rate decisions would also help. Mr. Draghi also urged governments to press ahead with plans to strengthen the euro area, including plans for a fiscal instrument, for example, a rainy day fund, to help countries in the bloc cope with shocks and move to complete its banking union system for dealing with financial crises. EU leaders are set to take a first set of decisions on reforms to the currency bloc at a summit next month. So, John, oh man, so there's so many fallacies in this article here. Where do you even begin? Everything from quote unquote stimulating the economy to all the manipulated numbers that the European Central Bank and the banking system and governments around the world are so good at, hiding employment numbers with the labor force participation rate, hiding actual growth numbers by just pumping economies with money that they print out of thin air. And now, there's so much to go into. Anyway, John, what do you think about the announcement regarding quantitative easing by Mario Draghi?
Well, it's no surprise that is happening, Josh. That's happened, of course, in the United States. And I just want to bring up two charts here that people can actually see that is very interesting. And it'll give you kind of a understanding of how, you saw the quantitative easing and the pumping up of the monetary supply. Because what they did initially is they did, buying back their own bonds of the United States. So the United States holds a massive amounts of government bonds that they have, and you can actually see the quantitative easing programs here on the M0 chart on the historical scale. And you actually see it, you got quantitative easing 1 in 2008, then you got quantitative easing 2, QE3, then you had the last one there, QE3, and then it just stopped, right? Because now you see the M0 is falling down because of course, they're going cashless, but mostly because that there's no more stimulus into the fiat currency economy, and it's deflating as normally it would, because there's so much allocated debt around the world that is unsustainable. It was, invested in terrible investments, and of course massively financialized. It became over in the United States. But what's interesting is, after they quit the quantitative easing, you saw just a sudden, move to starting to run big deficits again. Look at the big deficit run up now, and you're starting to see it going up again. In 2008, you saw massive deficit spending from the U.S. government, but then it plummeted down. But then QE really took foothold. And then now you're seeing it, as QE has stopped, the deficit spending is going up, because that's another way of printing money. Is by, of course, that's the first way of printing money, is you doing the government deficits and you spend it into circulation. And then what happens is the Federal Reserve actually gives a check out to the government, and that comes from their magic $0 bank account that doesn't even have any cash in it. It's ridiculous. They're the Ponzi scheme bank. And then, of course, they issue bonds and so on. And then the cash that the government receives after they issue the bonds to the banks to sell it, then they actually get that money into circulation into the commercial banking system, where you then have the banks can fractionalize that into 10 times more, but now it's more like 100 times more. Who knows how much leverage they have, because they kind of exited out of the whole belief that the fractional reserve banking, the banks could just do whatever they want. They're entrusted to have a zero reserve policy, so it doesn't matter how much they have. They're all safe, it's all fine. But I'm going to go back to and show you now the asset purchases from from the European Central Bank, the ECB. And one huge thing that you could actually see here is what they've done is the corporate bond buybacks to prop up the corporations in Europe in order to keep them afloat. So they've been doing the same thing as the Fed did with quantitative easing with government debt. They've just been buying corporate debt. So look at that, Josh. Look at the run up at the purple on your ECB's own chart here.
Wish I could. I'll see it when I edit it.
Yeah, it's ridiculous, Josh. You're looking at over a doubling, almost a tripling of buying these assets. It's ridiculous how much they've printed out of. Printed euros and then bought all these corporate bonds in order to stop the stock markets from falling. It's kind of a different way of doing share buybacks. It's a little bit different, but it's all about monetizing debt. And this brings me back, Josh, to something that I probably should. This is something I mentioned in another video I just did, but I actually looked at the speech of Ben Bernanke in 2002. And this will really scare the heck out of you when you read this, Josh, because it'll tell you exactly what they are prepared to do.
I think it'll more satisfy and vindicate us, but
yeah,
sure,
of course.
Go ahead.
but this will actually give you in detail what they plan to do, not completely in detail, but very much in detail, as much detail as you can get from the central bank's mumbo jumbo language. Anyways, it says, Josh, of course, this is Ben Bernanke speaking. Of course, the United States government is not going to print money and distribute it willy-nilly. Although, as we will see later, there are practical policies that approximate this behavior. Normally, money is injected into the economy through asset purchases by the Federal Reserve. To stimulate aggregate spending when short-term interest rates have reached zero, the Fed must expand the scale of its assets purchases or possibly expand the menu of assets that it buys. Alternatively, the Fed could find other ways of injecting money into the system, for example, by making low interest rate loans to banks or cooperating with the fiscal authorities. Each method of adding money to the economy has advantages and drawbacks. Oh, there's drawbacks here, Josh. Both technical and economic. One important concern in practice is calibrating the economic effects of non-standing means of injecting money may be difficult, given our relative lack of experience with such policies. Thus, as I have stressed already, prevention of deflation remains preferable to having to cure it. If we do fall back into deflation, however, we can take comfort that the logic of the printing presses example must assert itself, and sufficient injections of money will ultimately always reverse deflation. So the most important part of that whole thing is, of course, the last kind of his comment to his that they're not going to print money willy-nilly. He says, although, but as you can see, we might do this anyways. And then at the middle of it, he actually says that they'll be looking at to expand their menu of asset purchases. So, look at what happened with Bank of Japan. We just recently talked about that, how they've been buying all these assets that they shouldn't even own. And then, of course, at the end, he said that they will do whatever it takes to fight inflation, and not to fight deflation with inflation. So they're going to print as much money as they can to try to fight off that deflation. But the problem is, if the deflation is so great and the economy is so unsustainable, they believe that they could just print themselves out of any problem. And it's a ridiculous idea, Josh.
It's absurd, and it's kind of counter what he's saying to what Paul Volcker spoke of in the 1980s, interestingly enough. But I do want to mention that, so much of this is out of desperation. What's happening right now is out of desperation. They are doing anything they can to prop up their old guard system, which is going down. If they like it or not, people might not believe it, people might not see it, but it's happening slowly but surely, which is showing the devastating effects on the economies, markets around the world. Now, I want to also mention that this is all fake. Everything is artificial. Everything's fake. It's all debt servitude. It's all meant to enforce debt onto the populace, which is then forced to pay at gunpoint for all of this insanity. And I mean, seriously, gun to your heads, folks. You are being forced into this debt servitude where such a vast sum, a vast percentage of the stolen funds from you, aka taxation, goes towards paying off the interest on the debt, goes towards this massive fraudulent fiat system worldwide, which always reverses zero, always has, always will, going back to 1024 AD in China. It's absolutely absurd that with just from the fractional reserve system to the zero reserve policies popping up all over the place, the massive banking system worldwide, most of the banks are bankrupt according to their own balance sheets, credit unions included. Folks, this is where you see these problems and you do what you can as an individual to solve these problems for yourself instead of waiting for the government and the bank that's creating the problems in the first place to help you, to fix it for you, because they are dependent on the dependence of the masses. They love your debt servitude. They love you being on your knees, begging for help over problems that were created by them in the first place. It is the perfect system for them to run, and now they are desperate. Like you mentioned with the M0, they're going into the centrally planned cashless system. You see that in China, and you can see that in India. China, they're talking about putting the IMF's headquarters in Beijing in the coming years. I mean, they're really preparing for this system while attacking, decentralized cryptocurrencies, by the way. But John, as this continues to ramp up, as Mario Draghi also talks about trying to cut out depositor insurance so that they could do bail-in regimes and stuff like that, so there can't be runs on the banks. I mean, they are preparing for every single angle of this. What do you think that this move is going to lead to over the next short while? And keep it somewhat precise because we need to close it off right away.
Yeah, well, the problem, Josh, is that they don't even know themselves. I actually forgot to mention when I was going through what he was saying here, Josh. He says one important concern in practice is that calibrating the economic effects of non-standing means of injecting money may be difficult given our relative lack of experience with such policies. That just shows you they have no clue really what they're doing. They're just going to do it. They're just going to print more money. It just baffles me, Josh, that these guys are the leaders of the whole economy, trying to manage it and control it. And just to finish it off, Josh, I just had a recent comment from a guy on one of our videos. I think it was the one that we just did about the stock market just a couple of days ago. And he said, well, Keynesianism has worked since the 30s. It's like, what? Keynesianism has worked? Well, what about the several times it defaulted because they started to print too much money and they couldn't stay accountable, so they had to continue to just print mass amounts of money. It failed so many times. It failed. Let's see now. It failed 3 times, Josh. After the Fed was created, it failed 3 times. And then now it's on its fourth failure because now there's
Obviously,
nothing.
John, you haven't been paying attention to Paul Krugman's masterclass.
Oh yeah, that's right. I really if somebody could donate me some money so I could take some economics lessons, because clearly I don't know what's going on in the world. I don't understand anything.
The internet is irrelevant. Bitcoin is irrelevant. All these things are irrelevant. As relevant as a fax machine, John.
Well, it just comes down to you got to understand history. These guys, as they said, they don't really know what they're doing. They have a lack of experience with doing all this crazy monetary manipulation. So there's nothing, like they're in a total uncharted territory because they've been living in, the economists, they live in the latest, 100 years since the Fed was created. Nobody cares about what happened before then. Doesn't matter, a whole bunch of 1,000 years of fiat monetary history. No, just push that aside. We're going to completely re-engineer the system and it's going to be better this time. That's what they said so many times.
Even worse, so it falls on the populace and crushes them even more so.
Yeah, that's what they said so many times throughout history, Josh. This comes down to the last piece that I want to say, and that's we gotta start to actually educate ourselves about economics and money, because we can't let these guys continue to run the economy into ruin. Meanwhile, they're dragging about 7 billion people with them into that ruin. We got to understand economics. We got to understand money. Don't go and get an economics degree. Go and study monetary history, because that'll give you a little bit of an insight of the psychology behind fiat money.
And it'll scare the hell out of you and push you towards bettering your own life.
Yeah, exactly. And, the lack of actually, you will understand why these guys needs to keep on printing money. The system is flawed in the first place. So that's why, they need to do this. And that's what, you saw in Ben Bernanke's speech.
Absolutely.
We don't know what we're doing, but we're going to do it anyways. Doesn't matter.
Exactly.
We'll keep it afloat.
Absolutely. We gotta
Trust us.
Close it off, John. We're running out of time. But I just, as always, this comes down to individuality, self-sustainability. Financial education is key. Responsibility is key. Food, water, shelter, self-defense. You're not gathering things for the toughest guy on the block. And of course, gold and silver as wealth insurance. Insurance of your purchasing power, not meant as investment advice. It's not an investment, my opinion, but let's look at history. And then decentralized cryptocurrencies with sound fundamental values. Do your own due diligence. Most of them are terrible. Good 5% are really going to change the world. And I'm telling you that 100% with complete confidence. You just have to understand them and understand what the innovation on the decentralized blockchain infrastructure is, apart from the centrally planned blockchain infrastructure, which is being propped up by governments throughout the world, as well as the IMF. So that's very important. And of course, like I said, self-sustainability and responsibility. Responsibility is a hallmark of freedom itself. Don't allow them to shove you down that bottomless pit of debt where you're forced to ask for a ladder up from the government and the banking system, pushing you into perfect servitude right where they want you. You are a free, intrinsically free human being. Do not allow them to drown you in this sea of debt. Do not allow them to coerce against you, to use you, to destroy you, to push you into poverty, to steal from you, and then use your own gullibility as a weaponized tactic against you once again, twice over. Folks, you need to break free from this organized crime system that we call governments and banks, etc. Yeah, absolutely. So anyway, thanks for going into this with us, John. And until next time, this is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth.
Be the change.
Like what you see here, OM? Don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so vastly demonetized and censored on YouTube, as these guys come in and flag all of our content as hate speech. Also, check out our Bitcoin address below, as well as on the screen for you to scan, if you please. And also, check us out at steemit.com. We're at Josh Sigurdson. It's a future of social media where you get paid in the upvote of your post in cryptocurrency. Steem, that is. So make sure to check us out there. Make sure to join us at Anarchapulco 2019 with people like Ron Paul, G. Edward Griffin, of course, Jeff Berwick, Vid Jedlicka. So many incredible speakers are going to be speaking. It's just a massively growing event. It is something you have to see to believe. So make sure to check it out below and save money on your tickets by using promo code WHAM, that's WAM, and I hope to see you there. Also, check out our newsletter as we are getting demonetized and censored and all that. We don't know what comes next, so we have an email, worldalternativemedia@gmail.com. Send us an email with subject line YES, YES, and we will include you in the newsletter where we will continuously keep you updated. So until next time, thanks for watching, everyone. This is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
I'm sure you have already changed people's minds in your young age because you're involved, and I like that.
Thank you.